Today I have a class for you on how to increase credit scores fast. Tips from a lender and a credit pro. A little bit about me. I used to have a credit repair organization. I have about 1,500 active clients. Seen a lot of credit reports, and I've helped a lot of people go from really, really bad credit to good credit in a short amount of time. I'm going to give you some resources and some tips and tricks that you guys could use with your buyers or your sellers or anybody that you know is having challenges with their credit. There are going to be some things that are going to make you more knowledgeable and things that you can, just be resourceful as a realtor to your buyers or your sellers. Okay, so let's share the screen now. And I have a little PowerPoint for you guys. If you guys have any questions, please let me know. Put something in the chat. Can everybody hear me okay?
Yes, thank you. Hi, Chris Negron.
Okay, thank you, Damara. All right, so here is the PowerPoint. So how to increase credit scores fast is from a lender and a credit pro. We're going to be going over the following, just a welcome and an intro. Thank you, everybody, for being here today. George, thank you for allowing me the opportunity to be here, spend some time with your realtors and work with you and teach them some knowledge on credit. We're going to also be going on some resources and tips on how to improve the credit scores fast. First, I want to go over understanding credit scores. What makes up a credit score? If you know these things, these five main elements of what makes up a credit score, then it's going to be a lot easier for you to help people increase their credit scores. All right. So here are the factors that affect credit scores. One is, first thing is going to be the payment history. This one weighs a lot on your credit. This falls under like anybody that has late payments or things like that. If you have late payments that are very recent, this is going to weigh down your credit scores a lot. Credit utilization. That is the amount of credit that you're using versus your available credit. So if you have $1,000 worth of available credit and you're using $500 worth of that available credit, and the balance was reported to the bureaus, then that means that your utilization is at 50%. Rule of thumb, you want to be at 30% utilization or less. Number three, length of credit history. So the way that they come up with this is they grab the newest revolving account and the oldest revolving account. So if you have one account that's 15 or 20 years old, and then you just opened one up last month, that's going to bring your average down of all the credit cards. Now, if all your credit cards are 10, 15 years old, then your average age of credit is 10 or 15 years old. That is great. Anything above 5 years is excellent. So that's what the length of credit history is. They just want to know that you have a long history of managing debt or managing your revolving debt. Number four is new credit applications. They want to see not too many hard inquiries. They don't want to see somebody that's going around to a bunch of different banks or different car dealerships and applying for credit all over the place. So you want to have in the last 24 months, because hard inquiries stay on your credit report for 24 months, you don't want to have more than like 10 to 12 within that time frame. Obviously, if you're starting to build up your credit, you might have some more initially, but after that, you shouldn't let people run your credit just for no reason. If your credit is not good, don't apply for things because the likelihood of you getting approved is not gonna be high unless you have some sort of way to know that they're gonna approve you. Capital One, it's a great way where they will check your credit first, do a soft pull that's not gonna put a hard inquiry on your credit, and they'll let you know whether you're approved before they put the hard inquiry on your credit. If you accept the terms of their approval, then at that point, that's when they'll pull the credit and get the hard pull. So at least, you don't get a hard inquiry for no reason. They'll let you know whether they're going to approve you. And lastly, the fifth thing that weighs on your credit is credit mix. What does that mean? We have multiple different types of accounts on our credit report. We have revolving accounts, which are credit cards, installment accounts. An installment account is an account that has the same payment every single month. This could be a lease. This could be your mortgage is kind of like an installment account, but it falls under mortgage. Something that is going to be the same payment. Personal loans fall under installment accounts. So you want to have a good mix of this. A good mix is something like having an auto loan, a personal loan, having a mortgage that's been paid off, Those are a good mix along with all your different revolving accounts. So those are the factors that make up your credit scores. All these things are put in together into like a mathematical formula that FICO or the credit gods have, and then it spits out your credit scores. Okay. All right. One of the first resources that I want to go over is Experian Boost. What is Experian Boost? How does it work? What are the benefits of using Experian Boost? Steps to get started. Experian Boost is actually something that they do a lot of marketing for. It. You guys may have seen it on a lot of TV commercials. They pay a lot of money for marketing. Why is this good and why am I telling you about this? So I'll give you a scenario. I had somebody that just got here from another country. They had a social security number, but they had nothing reporting to your credit report, to their credit report. So when I pulled their credit, there was nothing there. It was just wiped clean. Now they had a personal account where they had been paying their utilities from for the last 6 months. So if you have a personal account that you pay your water bill, electric bill, your cable bill, internet bill, any of those items on it from a personal account, you could link that personal account with Experian Boost. And what Experian Boost is going to do is going to look back at the history or through all the bank statements, and it's going to pull those payments that have been made to the utilities, and then it's going to actually report those accounts onto the credit report instantly, like within minutes. Now they're going to have an Experian credit score. So that's a way to help somebody get a score that maybe does not have a score. It's a very quick way. Now they have to have been paying their utilities from a personal account. It's very easy. It's also free, and it also gives you anywhere between, from what I've seen, anywhere between 5 and 15 points extra on Experian Boost when you use it. The way that you get Experian Boost is you just download the Experian app from whichever marketplace you guys have for the apps, the App Store and on Apple, and the Google Play Store for Androids. So those are the benefits. You get, anywhere between 5 and 15 points. And if somebody's not have doesn't have anything reporting to the Experian Fund report, this is a way to instantly get something to report there. Rent reporters. This one's awesome. So if somebody has not enough positive accounts on their credit, they're struggling, they have a lot of challenges with their credit, and their scores are not high enough, this is a great, and they're renting, they've been renting for the last 5, 10, 2 years, 3 years, whatever the time frame may be. Rent reports, rent reporters is amazing because what this does is it's gonna actually put a new account onto their credit report, and it's gonna backdate it to the date that they started renting. The way it works, there isn't like an initial fee. I think it's like $95 and then $9.99 every single month. So initially what it does is you put your landlord's information or the management company where they rent from. It's going to send them an email. The email is very simple and broke it down. It says, hey, we have this and this person that says they rent from you at this and this address. They have always made their payments on time. Click the green button. If you have any lates or anything, click the red button. For the most part, everybody always clicks the green button. Now, if that person has been renting for 5 years, paying $1,200 a month, for honestly, let's say $3,000 a month because rent's so high right now. Now that account is going to report to that person's credit report, and it's going to give them the 3 to 5, 10, 15 years history they have. And that's going to obviously help boost up the scores because that's going to be a very, very strong age season count that's going to go back into time. There's not many ways to do this. There's only one other way to get like a season grade line on there, which is an authorized user, but an authorized user is not their primary account. This account is going to be primary in their name and it's going to be updated. Next, here's another way to put positive things on somebody's credit that makes have a bunch of challenges. Credit scores are not high. Secured credit cards. Usually with a secured credit card, you don't need to have a high credit score. They usually don't care about the credit score. The way it works is they usually have like a minimum payment. The payment may be $200. So the customer would pay $200 for the card, and then that bank is going to issue them a credit card for $200. Now, if they want a higher credit limit, usually you just pay the minimum. Once they receive the card, they call, hey, I want to put an additional $1,500 on my card. Where can I send the payment? They'll accept that payment. Now they have a $1,500 credit limit credit card, something that's reporting positively to the credit report. This is Obviously, something that's going to help them, it's going to be a new account, even if they have low credit scores. But if they start making these payments on time, now it's going to look like they're managing their debt better while they work on all the negative things. Sometimes people's credit scores don't go up because they have a lot of negative, not enough positive. So this is another way how we can get positive things to the credit report. Um, Capital One has secured credit cards. We have another one that's called a credit builder card. None of these base their decision to give their credit report or the credit card or issue the credit card based off of their credit scores. This is going to be good for people that may have had bankruptcies in the past, have really low credit scores, maybe repossessions and things of that nature. This is how we get them started again and start getting positive things to report to the credit. Okay, this is something that's a little bit more advanced. Somebody has negative accounts on their credit report. This could be a charge off or a collection. Charge off is something that they have been reporting to somebody's credit report. They didn't pay it for some time, and now that company has charged it off, and it's now coming up on the credit report as a charge off account, and it still has a balance. The pay per delete method, exactly what it is, exactly what it says is exactly what it does. When you call and you negotiate these things with the creditor, right? Let's say we have a collection that's $1,000. You can negotiate once it's in collection or charge off status. You could call and negotiate lower than the amount that's owed. This is always going to result in an increase of credit scores. Now, if they don't always delete it, if it's a collection account, you have higher probability of them deleting it in exchange for the payment or whatever negotiation it is that you made with the creditor. If it's a charge off, it's a lot more difficult to get a pay for delete. But I always tell everyone to make sure that they ask for the pay for delete because maybe they'll say yes. And pretty much what that is that once you pay that account to whatever terms you guys agreed upon, once you pay for it, they agree to delete that. And what they will do is they'll give you a letter after they have accepted the payment. They don't always give it to you up front, but after they have accepted your payment, they'll give you that letter. And with that letter, you can go to the credit bureaus, send that to the credit bureaus, and they'll delete that account off of your credit, resulting again in an increase in your credit scores. Authorized user credit cards. I talked about this a little bit. Authorized users are really cool. It's also known as credit piggybacking. What this does is you're pretty much piggybacking off of somebody else's credit. So somebody that has good credit, maybe has a bunch of credit cards. Um, what things to look for when you're going to get added to an authorized user? Whatever that person has on their credit card, whatever their balance is on a credit card, whatever their utilization is on that person's credit card that's going to add you as an authorized user, that's going to come out on your credit reports too. So if they have $1,000 credit limit and they're using $900 of their available limit, credit card is going to be at 90% utilization. When they add you as an authorized user and that reports to your credit, now you're going to have 90% utilization. So you're not going to want to get added to that card because it's going to make your credit scores go down. A good candidate or somebody that could help you, somebody that has maybe a lot of different credit cards, has a $5,000 credit limit or higher, and a card that's been open anywhere from 2 to 5 years or more, and has a very low balance, 10% or less of the credit limit. So if it's a $5,000 credit limit credit card, hopefully they don't have a balance that's more than 500 bucks. Because exactly what the way it reports on that person, the owner's credit report is going to report on yours. So you want to make sure that everything is optimal, so that way you get the biggest benefit from it. These authorized user credit cards are getting added as an authorized user. It's very, very powerful and it can make somebody's credit score go up very fast. And I'm talking about in days. When somebody adds you as an authorized user to their credit card, usually it's going to report to the person that they added as an authorized user's credit report 2 to 3 days after the statement closing date. So sometimes if you know exactly when your statement closing date is and it's coming up in the next few days, if you add somebody, this will boost their scores very, very quickly. And you could get added to more than one. All right. Next, I'm going to talk about the credit utilization, how much of the available credit you use. So if somebody has $10,000 worth of available credit that you see here, and they're using $5,000, their credit utilization rate is 50%. Rule of thumb, you want to be around 30% or less. Obviously, if you're not going to do anything with your credit, that time or you have nothing specific, you're not going to buy a car and you need to utilize or leverage your credit because you're working on a project, it's okay to have higher utilization. But if you're going to buy a house or you need to get pre-approved or you're going to go buy a car, you need to apply for maybe a business credit card. You want to have that utilization as low as possible so that way it increases one, your score, and two, it increases the odds of you getting approved. Because somebody that has very high utilization and is in the 80s or 90 percentile of utilization, when a bank looks at your credit application, it's going to be like, wow, this person maybe doesn't manage their debt too responsibly. They kind of look risky because they're using a lot of their available credit. So you want to make sure that you maintain that at 30% or less. Obviously, if you go higher, it's okay. But if you're going to do something with your credit and you're going to utilize your credit, make sure that you're at 30% or less. Or the closer you could get to 2 or 3%, the better. Another thing too, a lot of people pay off their credit cards every single month and they leave it at a zero balance. That actually causes your credit score to go lower. It doesn't let it reach its highest potential. Reason being is if you're not using any of your credit cards and it's at zero and you maintain it at zero every single month, now they really don't have much to score you on. So you always want to leave a little small balance on there. When I say a little small balance, instead of leaving it or bringing it down to zero, you got 10, 15, 20, $25, depending on what your credit limit is. It's gonna cost that's gonna actually give you anywhere between 5 and 10 more points just for having that little balance on there. But I know it's happened to me, maybe it's happened to some of you guys when you pay down your credit cards and you bring it all the way down to zero and you have a zero balance, what's gonna happen is your credit score is actually gonna go a little bit lower. And as soon as you get something to report, 10, $15, credit score is gonna go back up. All right, this one's really cool. Rapid rescore. This is something that all lenders, this is something they have to do with your lender. Whoever it is that you use for lending, they have access to do a rapid rescore. This is going to give you a quick credit score improvement. I'm going to go into the reasons why we would use or what a rapid rescore is, and then why we're going to use a rapid rescore. So the definition, it's a process used by lenders to update credit information on a credit report quickly. Usually the turnaround times on a rapid rescore is anywhere between 2 and 5 days. If you pay for a rush service, 24 to 48 hours, you get a result. The purpose of this is to improve the customer's credit score in a short period of time, usually within a few days. Okay. Sometimes they're expensive, depending on how many accounts we need to update on the credit report and the speed, how fast they would need it done. So the rapid rescore process, how are we going to use it? One, we're gonna identify what the error is on the credit report. If there's an error or something that's reporting an error, or maybe they paid off a credit card at a very high balance and their utilization is 99%, and we're in a transaction, we have deadlines in the contract and things that we have to meet. Once we do a rapid rescore, we'll be able to get those items or those accounts updated very quickly. Or if we pull somebody's credit and they weren't aware of an error that's coming out on their credit, maybe there's an extra social security number on there that doesn't belong to them. Their name is spelled incorrectly. There's an account that's coming up on the credit report that doesn't belong to them. It belongs to someone else and it's a negative account and it's hurting the credit score. This is where we would use the rapid rescore process. Once that happens, we're going to identify the error. Then we're going to collect the documentation that we need in order to correct the error. Either proof of payments, settlement letters. Maybe we paid off a collection and we need this to be rescored because the collection is now at a zero balance, and now we have a pay for delete letter in hand. So as soon as we get that collection or that charge off removed with that letter, the credit score is going to go up. Or any other relevant documents, depending on what the situation is. Then what we're going to do is we're going to submit that to the bureaus. We're going to request the creditor to update the account with the credit bureaus. The credit bureaus are going to review it. They're going to update it, and then they're going to give us they're going to create a new credit report with a new score. And that's pretty much what the process is. Important considerations with this process. Rapid rescores is a somewhat expensive service. $135 per account, and that's going to be for a normal speed. It's going to take about 5 days to get the results. Or on the high end, if you need a 24 to 48 hour turnaround time, it costs $270 per account. So if you need to update 3 accounts, it's $270 times 3. What are the limitations with a rapid rescore? A rapid rescore is not something that could be used to remove legitimate negative information on a credit report. If there's something that's negative there and somebody didn't pay an account, we're not going to be able to use this to remove the person's credit report. has to be like a legitimate reason or something that's there that's inaccurate or it's outdated, something that just doesn't make sense, that we have the proof of the documentation to be able to remove that off of the credit report. Okay, so if it's something that's legitimate, rapid rescore is not something that's going to be able to remove it. And then it's also something we use strategically. It's ideal for customers who need an immediate improvement in their credit scores to secure a mortgage loan. Again, because we're in contract, we got time limits. Next, I'm going to talk to you about different credit monitoring services. This is something that's really important. It's something that you could tell, your borrowers or your buyers or your sellers to use to monitor their credit. The best one and the most accurate one that I have seen is called the MyFICO app. That one is those scores are within 1 or 2 points from when we as a lender pull the credit report. It's a little bit expensive. It's $39.99 a month, but it is the most accurate one that I've seen. It'll give you your lending score for residential lending. It'll give you an auto score. It'll give you all the different breakdowns of scores. If you want to get a credit card, it'll tell you what your credit scores is for that. So that one's really, really cool. And it gives you daily, minute by minute updates. Anytime something changes on your credit report, that's going to let you know. I'm sure a lot of you saw yesterday on social media that there's been a huge data breach that's happened and everybody's information is out there and a company like released it. And my FICO actually told me about this data breach probably 2 weeks ago. Gave me a bunch of notifications that my information got out on the dark web, and now yesterday is really when you heard the buzz and that everybody's talking about it. So that's another good thing with credit monitoring services. It gives you, you know, very quickly. It tells you when something is changing or someone's trying to apply for credit on your credit report, and it sends you a notification. It sends you an email, a text message, and everything. Credit Karma is another credit monitoring service. It's good. It doesn't use FICO scores though. It uses the Vantage 3.0 scoring system, which no lender and nobody is ever going to qualify you for anything based off of that score. So those scores they're real scores, but they're just deceiving. They're usually 20 to 40 points off from when us as a lender pull somebody's credit, to get a mortgage loan. And then Experian, another free app. I like Experian a lot because it gives you your FICO 8 scores. And it's very, very accurate. And it also gives you the ability to lock and unlock or freeze and unfreeze your credit report. So that way nobody could use your credit and you have control of anytime somebody's going to pull your credit, you go in your app, you unlock it, and now somebody can pull it. And then when you're done, you lock it again. So it gives you an added value of like security on the credit report. So credit monitoring obviously is important just for the reasons that I just said. There's a bunch of different tools and services. My Score IQ is another one. This one gives you your FICO 8 scores. And it's just good to monitor it. Again, it lets you know and it sends you notifications anytime that there is something that has changed or someone that's trying to access your credit file. Put this in here because of what happened yesterday, data breach protection. Again, just lock or freeze your credit bureaus using their apps. For Experian, you can lock it on the Experian app for free. And Equifax has the lock and alert. That one allows you to lock your Equifax report as well. TransUnion is the one that's a little bit tricky. They make you pay for a subscription in order to have that service to be able to link and unlock it. If you don't want to pay for it, you can call TransUnion and ask them to lock or freeze your credit report, and they will do that for you. So, but then you always have to remember, anytime that you're going to use your credit or someone's going to pull your credit, you need to unlock all of those bureaus or the bureau that they're going to pull from. So that way, when they pull, the information is actually released by the bureau. Okay. That is all I have for you today. I don't know if anybody has any questions. Here to help and in the WhatsApp group chat with you guys. So if you guys ever have any questions, if you have a buyer, if you have a seller, anybody that you're working with that may have some challenges with your credit, please give me a call, utilize me. I'm very helpful. I like helping people. And of course, if you ever need any questions on lending or any help with any types of different loan programs, I'm always here to help you. Again, I'm with Columbus Capital Lending, expert with credit, seen a lot of credit reports, and I've helped a lot of people increase their scores. So if you have any questions, you could drop them in the chat or mute yourself and let me know. I'll stay around for a few minutes.
I had a quick question.
Yeah.
So I think someone had told me, I'm not sure if it's 100% correct, but when you have that increase on your account and you don't get approved for that account, is it a way to dispute that? Like if you don't get
So,
approved for that credit, so if you like apply for $1,000 credit card and you didn't get approved for it, but that was a hard hit on your, on your credit, can you dispute that because you didn't get approved for it? Okay.
I mean, so disputing it is because you feel like there's something wrong. If you actually applied for it, like, and you just didn't get approved, it's not really a reason to dispute it. Do people take advantage of that? Yeah. As long as it
Okay.
didn't generate a new account. So like, let's say, for example, you were shopping around to buy a car and you went to like 3 different car dealerships and they pulled your credit maybe like 5 or 6 times because car dealerships are notorious for doing that. And a month later, a new account comes up because you got approved to buy a car and you got the car. So a month later, that account comes up. All 5 of those hard inquiries or the 5 times that they pulled your credit, we're not going to be able to remove those because those are tied to you getting the new car.
Okay.
Try to dispute it or remove it in that gap of time where it hasn't reported to your credit yet, you can get it removed. Experian is the easiest one to get it removed. It's usually within 24 to 72 hours. You could get the hard inquiries removed. If you have that situation, give me a call or text me, and I'll tell you what you have to say to get the hard inquiries removed. They're only going to remove the ones that did not generate a new account on your credit.
Okay. Perfect. I have a couple of those.
That's right. Hit me up, and I'll help you. I'll give you the method on how to get it removed.
Hey,
Awesome.
Chris, I have a question for you, Chris.
Yes, sir.
Let's just say, because I get this a lot for all my buyers. Hey, look, I already ran my credit with another lender. Is it gonna affect it if I run my credit with you?
So that's a good question. That's a loaded question, and I get it all the time. So I have done research on this, right? And I get mixed things. So me as like a credit repair person, I know that every time so it depends, right? It depends who's pulling the credit and how that mortgage company is pulling the credit. If it says for mortgage or mortgage related, it should only drop your credit score once as long as the credit pool is within 30 days. Right. So like let's say you go to 3 different mortgage companies, the 3 different mortgage companies that pulled your credit for a mortgage loan, pulled it should only drop your credit score once. In my experience, from what I've seen, is that it drops the score anywhere between 7 to 10 points. I know for us at Columbus Capital, it drops the score 7 points. But like let's say some other companies or like different companies, they don't pull the credit as a mortgage hard pull, then that's where it might drop the score, more than one time. But as long as the hard inquiries for applying for or shopping around for a mortgage are done within 30 days, it should only drop the credit score once.
So pretty much, if I go to like 4 lenders within 30 days, it's only gonna drop 7 points.
Right.
And then what about in the inquiries? How would that look there?
So you'll have multiple inquiries there. Inquiries
I'll
are going to
have
stay there and they're
4,
going to remain on the credit report for 24 months.
but that wouldn't impact my credit score. It would just be there.
That'll just be there because since they're all mortgage related hard inquiries, it should only drop your credit score once.
And then within 24 months, they get removed immediately.
Automatically, those hard inquiries will remove off. All hard inquiries will purge off of your credit report within 24 months. Obviously, there's ways to get them removed beforehand, like I just explained before. We can dispute those, and there's different methods to do that, depending on what the reasons are. But if you're just going to leave it there, somebody pulls your credit, it's going to remain on your credit for 24 months.
Got it. Okay, so let's just say I ended up going with Columbus Capital and then the other 3 banks, and I try to dispute those 3 other inquiries. Would that make sense or not really?
If you have the other hard inquiries, yeah, it would still be fine. So one of the things that we have to do in the mortgage process, if we see multiple hard inquiries, right? Because we don't want a borrower that's maybe applying for a loan to be applying for multiple loans at the same time for the same property, right? That's mortgage fraud. So one of the things that we have to do when we see those multiple hard inquiries is that we need to always ask to see like, hey, we see that you've been shopping around to other mortgage companies. Did you actually fill out an application or are you getting a loan anywhere else other than here? Then that's always going to be a condition that we get if we see multiple hard inquiries on the credit report that are mortgage related. We have to make sure like, yeah, hey, these hard inquiries are a result of shopping around for a mortgage and they did not generate a new debt. They're only doing the loan with us. They're only getting one loan. That's just an explanation that we would have to give as lenders, and we need to test that and verify that with the borrowers to make sure that they're not applying for 2 loans at the same time for the same transaction.
Got it. And then what credit do I need to be able to buy a property?
So it depends on the program that you want. The minimum score is a 580 for an FHA. There's many different factors. Just because they have a 580 credit score doesn't mean that they're automatically going to get approved. Obviously, also as lenders, we like to see around a 620 to 640. But if somebody has a 580 credit score and they have a lot of money in the bank, and they have good work history, and they have a lot of other compensating factors, and the only thing that's negative is the credit score, it's possible that DU, which is the system that we run the credit report and the entire scenario through, can give us an approval with a 580 credit score. But if that's not the case, which is usually not the case, if somebody has a 580 credit score, they usually don't have a lot of extra money in the account for reserves. So that's why, rule of thumb, like anywhere between a 620 to a 640 is what we would need as a minimum credit score to get someone approved for a loan, whether it be an FHA. And then if we're going to be going conventional, we would like to see a higher score, anywhere between 680 to 700 would be the minimum scores. Thank you, my brother. Thank you.
Wait, Chris, can you repeat the scores, the minimum scores, please, for conventional one more time for me?
So for conventional, depending on the program, let's say anywhere between the minimum score will be anywhere between 660 and 680.
Thank you so much.
What we would need. It all depends if DU is going to accept it. It depends on a bunch of different factors. Did that answer your question?
Yes.
And then one more. Oh, sorry, go ahead.
Oh, no, I'm sorry. Go ahead, Marvin.
No, go ahead. I'm right behind you. Right behind you.
Okay, thank you. Well, I wanted to ask you because you had mentioned about the Experian Boost, and I wanted to know if that does a soft pull on the credit card because you mentioned that it's a one-time payment. I wanted to get more details on that.
All right, so Experian, right? Experian is one of the three major credit bureaus. We have TransUnion, we have Equifax, and we have Experian. Experian has a really nice, good app and technology. So no, it's not going to do like when you go on the Experian app and you sign up with Experian Boost, it's not going to put a soft inquiry or a hard inquiry on your credit because that's the actual source. They're the ones that hold all the information that give out the credit scores. So it's not going to put a soft inquiry or a hard inquiry on your credit report because they are the source. So they're pretty much just getting the information from themselves. And Experian Boost, the way it works is right now in the world that we live in, data is king. Whoever has the most data is companies that probably make the most money. So the reason why they're rewarding you for signing up with Experian Boost is because you're giving them access to your bank accounts when you sign up for Experian Boost. So what does that tell them? Because Experian has a profile on every single person that has a social security number. They have a profile on you. So now when you give them access to your bank accounts, you just gave them the keys to the castle. Now they know all your purchasing behaviors, how much money you make, where you spend your money, what restaurants you go to, what type of websites you buy things on. So you're giving them all this data. In exchange, they give you anywhere between 5 and 15 points, which in the grand scheme of things, yeah, it can make a difference. Not that big of a difference. So that's the way it works. Did I answer your question?
Yes, but I also wanted to
All
know about your credit card. You mentioned, I know about that you keep the money and they keep your credit card. Does that affect your credit score at all with a soft or hard pull?
No, it doesn't.
Perfect.
So
All
some
right.
of them do. So some of them do, not all of them. You always have to read the fine
Okay.
print. You know, the credit builder card, which is the one that I used to give to a lot of my credit repair customers when I had my credit repair business, would give them the secured credit card, and that one doesn't put a hard inquiry on the credit because it's pretty much they're issuing a credit card that's secured with $200 that you're paying them. That's how it works. It doesn't put
And
us
you
up.
also were talking about the MyFICO credit monitoring one. Now, you said that one was great. Is that one that charges you or is it free like credit card loan?
So the MyFICO one charges you. They're actually a little bit expensive. So they have multiple different plans. They have one that allows you to update or refresh your credit report every single month. That one costs $39.99. So $40 a month. And then it has a couple other plans. Like there's another one I think that lets you refresh the credit report once every quarter. So once every couple months it lets you. And then there's the cheapest plan, which I think is $19.99. It allows you to pull or refresh your credit report once a year. The cool thing about that is that even though you're not refreshing your credit report every single month, anytime something changes or something new, a balance increase or decreases, it's automatically going to send you a notification and an email letting you know, hey, something changed on your credit. So You get the cheapest plan and still get the benefits of the app. You don't have to get the most expensive plan, which is $39.99.
Perfect. Thank you so much, Chris.
Right. Antonio, I see you in the chat. You asked, what is the difference between a soft and hard pool score wise? Okay, so a soft credit pool, and this is something I use a lot as a lender. Sometimes, how many times have you been dealing with a buyer or someone that you're trying to get pre-approved and they don't want the lender to pull their credit, don't want to drop their credit score because they haven't really committed to who they're going to go with. So I do, and any of us as lenders here with Columbus Capital, I do a soft pull always in the beginning. Like if I know that there's going to be some challenges or they're not too sure about their credit, I'm going to do a soft pull. I do a soft pull. To answer your question, Antonio, a soft pull does not impact the credit score at all. It doesn't drop the credit score, and it does not put a hard inquiry on the credit report. So that's the main difference between a soft pull and a hard pull. A hard
Correct.
pull.
But what
A hard
about the score wise though?
The soft pull does not impact the scores at all.
Correct. No, I know it doesn't impact the scores at all. I just wanted to see how accurate are the soft beat and the hard pull score wise.
Oh, okay, with the scores. Okay, I got you. I'm sorry, I didn't understand your credit. So when we pull it, like with us, like as a residential lender, as a mortgage soft pull, when I do a soft pull, it gives me the exact scores that they're gonna get when I do a hard pull.
Got it.
So when you send someone to me for me to pre-qualify them, I usually will do a soft pull. If there's any challenges with the credit, there's no hard inquiry. We haven't dropped the scores or anything. Now, if there's any challenges, step two is what I'm going to do is I'm going to do a simulator, which costs like anywhere between 10 or 12 bucks. I'm going to run that simulator. What does the simulator let me do? It lets me simulate lowering balances on certain credit cards, and it's going to tell me exactly where the score is going to go after buyer, the customer pays those things down. So that's a very, very good tool as well, because right now for the Hometown Heroes program, you gotta have a 640 credit score. That's the minimum credit score. If you don't have that score, you can't take advantage of that program. So I've had some people that come in that they had challenges with their credit. Said, look, if you want to get the 640 credit score, you got to pay this and this off to this amount exactly. And they do that. We either wait for it to reflect on the credit report or we do a rapid rescore. When it comes back, exactly what my simulator says is what that what the hard pull is going to come back at.
Got it. Thank you.
So when we do the soft pull and the hard pull and we get the credit scores, exactly the same. All right, I see another question here, Fausto. What about bankruptcy from 3 years ago? Is that possible to remove? So a bankruptcy from 3 years ago, yes, it is. It is possible to get removed through credit repair. I've seen it done before. It's been done in my company. It's very, very difficult. Actually, not too long ago, Frank, you guys know who Frank is. He's taught some classes. He had somebody that had like a 750 credit score. There was nothing on the credit report. We had started the loan file. We were working on the loan. Everything was going normal. But when we do a mortgage, it's like an FBI background check. So we run something also called LexisNexis. So there was nothing on the credit report. The guy had literally filed for bankruptcy a year prior. So when you have a bankruptcy on your credit report, you can't get a conventional loan for 4 years. And if it's FHA, you have to wait 2 years after. This guy had nothing on his credit report, but obviously it came back with another check. Obviously that hurt the deal. He wasn't honest or straightforward about that. He didn't tell us that. Just he thought, oh, I got it off my credit report. And whatever, I'm not going to say anything about it. Well, we ended up finding out, and that works. So to answer your question, yes, it is possible to get a bankruptcy removed off of your credit report. Von Sil, I'm going to put the name of it right now. I'm going to put the website. So that's the app and then myfico.com is the website. Any other questions? I love all the questions, by the way. Thank you so much for engaging with me and learning about credit with me. I love credit. So I love teaching this and sharing this knowledge. Okay.
Hi, how are you? It's Angela. I have a question. So I believe it's called Say Rhino or something to that extent that's been used, it's been starting to be used a lot for renters. And the way, if I'm not mistaken, because that's how I was able to get one of my clients accepted, it's like, I the way they described it, it's like it's some sort of monitoring them for like rental. So like once they pay the rent, the landlord can go in and say it, and that's a way to boost people's credit score. Does that really work? Because, you know, obviously I had to do what I need to do for the landlord and we got them into it. But the landlord actually said that it was a great way to help people that have issues with credit if they don't really have much other than like rental payment.
Yes. So I am not familiar with that exact or specific product, but I did go over one it sounds just like rent reporters, and yes, it does, because those things, those softwares, what they do is they update it. So let's say you're the person that you were working with probably signed up for it now. If they had been renting there for the last 6 months or the last year, once they signed up for that service, should have backdated it. So that's a way to add a seasoned primary trade line in that person's name onto the accounting card. So yes, it is a very powerful tool. I have seen with my own eyes from 1 month to the next, someone used rent reporters. They were renting for 5 years at $1,500 a month. And when they sign up for rent reporters, it takes about 14 days for it to report onto the person's credit report. Their score increased to 144 points. So it
Yeah,
is a
that's
very powerful
awesome.
tool.
Okay,
Yeah,
so the other ones rent reporters, you said?
reporters, correct.
Okay, all right, that's awesome.
If you guys
Thank
want,
you.
if you want me to send you the link for some of these things for the credit builder card or the rent reporters, you could hit me up on the WhatsApp chat or just drop your email in the chat, and I'll make sure to send you an email with all the different links and resources that I went over today. Any other questions? All right. Well, thank you so much again for having me. Thank you so much for spending this time with me. We've been going for about 50 minutes now. I appreciate all the questions. Again, please don't be shy. Reach out to me with any questions that you have, whether it be credit related. Even if you're not going to do the loan with me, I don't mind. I still want to help you. I still want to be a resource to you. I could definitely help your borrowers or your buyers or your sellers that have any challenges with their credit, or even if it's something that maybe you are having some struggles or challenges with your credit and you want to come by my office and we can get together and go over it and maybe come up with a plan of action. No problems doing that. Just reach out to me. I'm in your WhatsApp group chat, Chris Negron. I think if you guys need me, I'm here. Thank you so much again for having me today. Have a great rest of your day.